And the major averages closing just a little bit lower today to close out the first quarter. And even though the markets were a little bit lower, we still had our biggest first quarter rally in 13 years. And today we kind of had a theme of inflation worries. The Eurozone inflation, we found out today, of 2.6% in March. That was more than expected. There are concerns that the ECB may have to raise interest rates next week. Also, remember, Walmart CEO warns of serious food and clothing inflation. And of course, there's also lots of concerns about the consumer, as we're paying almost $4 a gallon for gas. That will certainly hurt consumers. Crude oil also closing over $106 a barrel. That was our biggest gain in 2 weeks as Gaddafi retook control of an oil port in Libya. And traders say that right now the events in the Middle East is really what the oil market is looking at. Those energy stocks were higher, Rowan in particular higher after Moody's upgraded the oil drillers outlook. Julie?
And of course, Deborah, it wasn't just oil. We saw other commodities soaring as well. I mean, from metals to some of the grains also.
You know, and that's right, Julie. Gold and copper rising, and in fact, those material stocks were actually the biggest gainers in the S&P on the day. But the real hidden story here in the first quarter, it has been the commodities. Let's face it. Silver up 22% year to date. Silver had its 9th straight quarterly gain. And also, when you look at getting back to today's session, traders say that we're also in a little bit of a wait-and-see mode today ahead of tomorrow's jobs report. One of the reasons that we saw a lot of back and forth in the market, today's weekly jobless claims numbers falling by 6,000, and that was slightly weaker. But the expectation for tomorrow is for a very strong March jobs report, especially if that ADP report is any indication. What we're expecting, 190,000 jobs added to the economy in March. We'll have to wait and see tomorrow for that report. Julie, back to you, though.
Always hotly anticipated. Thanks a lot, Deb.